Welcome back. Futures this morning are mixed. Take a look. The melt up continues for the Dow Industrials. Take a look. The Dow Industrials up 127 right now. The S&P 500 up 25. The Nasdaq is negative, down about 11 points, but the rally yesterday was incredibly powerful. All three major indices extending the moves that we've been seeing recently. The Dow was up 907 at the close yesterday. That was the 23rd record close of the year. The S&P 500 was up 136. And that was the 25th record close of the year. All this largely due to strong earnings. S&P 500 earnings yesterday were up 43%. We are talking about strong backdrop here for corporate America. The Nasdaq also soaring better than 600 points at the close yesterday, carried by Palantir's blowout second quarter and big tech leading this rally. Treasury Secretary Scott Bessent was with me just late last month, and here's what he said about the backdrop and expectations for economic growth this year. Watch. What would be your expectation for growth in the second half of the year, Secretary?
I'm not going to give a guess, but I think that 3% is minimum,
okay.
not unreasonable, and I think we can start coming back towards the Fed's target level. I think PCE inflation versus CPI inflation. PCE has some quirky things in it where, like the stock market goes up, and because of portfolio management costs, the costs are going up. I think those are going to be adjusted this year.
Yeah.
So I think inflation's under control.
Joining me now is the Wall Street Journal's chief economic correspondent, Nick Timiraos. Nick, great to see you. Thank you so much for being here. How would you characterize economic growth in the backdrop right here? What's driving these markets?
Well, as you said, Maria, this AI boom, the build out, the fact that the market keeps going up and consumers, especially high-income consumers, are feeling wealthier. You saw in the GDP report last week a very strong quarter for consumer spending. So the economic backdrop for the country is solid right now. And if you go back a year and you look at what we were talking about a year ago, it was this July payroll report that came out in early August that was soft. And it was the soft payroll numbers that got the Fed to say, okay, maybe interest rates are too high and we need to bring them down. And the Fed did cut rates 3 times last year. So take things forward now 12 months, and you're in a different situation because the job market looks okay, the economy's doing well, but inflation is not making as much progress as people had hoped that it would.
Yeah. One of the reasons for that huge rally yesterday, though, was the plummeting of oil prices. Let's take a look at crude, pulling back yesterday on those positive comments about negotiations out of the Middle East to open the Strait of Hormuz. The price of crude this morning is at $76.65. We're way below now $80. Here's the president on the negotiations yesterday. Watch this.
Could happen tomorrow or the next day. Tomorrow, there a lot of progress has been made. They want to make a deal. They do not want to be hit. I think they'd be very smart to make a deal. We'll see what happens. They had a very good day. The negotiations were good.
So we're back and forth on understanding where we are. It's hard to know what to trust from the Iran side, Nick. But what's your take on inflation at this point, given the big drop in the price of oil?
Well, I think at the Federal Reserve, there's a focus on 3 different wild cards here. So last year, the focus had been on tariffs. If you look at goods price inflation, it's been coming down. And so that may be leading people to feel better, because that had been the Fed's forecast, that these things would sort of wash through, it'd be a one-time deal. Energy's been sort of up and then down, right? And so now we're in the down period. And I think the question is Iran going to, they take out a tanker? Do they continue missile strikes against our allies? And that sends prices up. It's kind of yo-yoing around. And so inflation may not get worse, but there's a volatility there that we are maybe not as used to. And then the final piece is really around this AI build out. You see things like memory sticks, prices going way up, a hockey stick on a chart. And that has been spilling into things like iPhones, consumer electronics. Does it hit, the chips that we put into cars and send car prices up? We saw that during the inflation of 2021. So I think those are all wild cards right now around the inflation outlook. And there's a story that says it's going to get better, and by the end of the year we'll be back at 3% or lower using that PCE measure. But there are more questions there right now.
Yeah, and that's what Scott Bessent said. He's betting on 3% growth for the second half of the year. But you look at a company like SpaceX, Adam Johnson, and yesterday the company said that the capital expenditures hit $18.4 billion in this quarter. The bulk of the figure, $15.8 billion, tied to the company's ongoing AI build-out, and double the previous quarter's total. So a lot of this euphoria lands right on the spending for AI.
Which is why we need to see that spending produce results, profits.
Yeah.
We're seeing that among S&P 500 companies. That's why we're seeing record profitability. I think it's an early return on AI. But I don't think that the hyperscalers have necessarily made the case to Wall Street and all of us who are watching that the money is actually generating the returns that we do need to see. And that was why stocks, sold off over the past 6 weeks.
Yeah, take a look at yields this morning, because the yield on the 10-year right now is trading right around, it's fractionally moving as investors remain cautious at yields hitting highest levels in over a year. Nick, what do you think's behind this spike in rates now with the 10-year at 4.6%? Yesterday we were at 4.7%, Nick.
Well, part of it's obviously oil. I think part of it's questions around whether the Fed is going to raise interest rates or not. There is a big inflation report next week, the July inflation report and the August inflation report in September. Those are the two big pieces of data the Fed's going to have before they go into their next meeting. And even though Chairman Kevin Warsh, didn't say a whole lot about his outlook last week, we've heard from something like 8 or 10 Fed speakers just since the Fed's meeting last week. And the message has been pretty consistent. They're worried about inflation. And if the next couple of inflation reports aren't as good as the last one, then there's going to be more noise for a rate hike at the Fed's meeting in September.
Yeah, and as you wrote the other day, Warsh wanted a family fight. Well, he's getting one, right? That was your headline the other day. But before we get to the inflation data, we'll get the jobs numbers, Cheryl. And we got the July ADP number coming out this morning at 8:15. Expectations, 70,000 jobs added to the private sector last month. And then the big kahuna of them, the July jobs report from the Labor Department out on Friday, 80,000 non-farm jobs expected there, Cheryl.
And that's going to be a better showing than what we got last month. So we expect, if these estimates are correct, we expect to see a stronger labor market showing. And look, I mean, we're now seeing companies are telling us that they've laid off too many employees, or they paused hiring, and that was a mistake. And so they're saying now they're trying to play catch up. That bodes well for the numbers that we're going to get out of the Labor Department.
Nick, what do you think Warsh is thinking about the jobs picture right now? He said the central bank is watching the jobs data this week to determine the next move on rates. I mean, I'm shocked that here we are at a moment where the debate is more about whether or not we're going to see a rate hike than an actual rate cut or no action. Your thoughts?
Well, so the jobs report's important because if it were to weaken, then I think that puts the Fed in a more difficult position. But as long as the stock market's doing well, the job market's doing well, the economy's doing well, it frees the Fed up to focus on inflation. And Kevin Warsh has been talking a lot about how that's the Fed's job, that they are going to bring inflation down. He keeps talking about, 63 months of inflation above the Fed's target. You won't get there tomorrow, but the Fed is going to be looking for comfort that it's coming down. And so I think that means the inflation data is more important right now to the Fed than the jobs data. They want to see some evidence that they can be confident they're going to get back to their 2% target. And if they don't see that, they're going to talk more about raising interest rates.
Yeah, exactly. And that's what Barry Knapp from Ironside Macroeconomics is writing this morning, that there are two important questions to discuss: whether technology innovation adoption and AI specifically are impacting the labor market, and the second, the reversal of the Biden immigration boom effect on the labor market as well. Nick, always a pleasure. Great to talk with you this morning. Thank you, sir.
Thanks for having me.
All right, Nick Timiraos, Wall Street Journal. We got breaking news on Disney earnings. Cheryl has the numbers right now. Cheryl.
And we've got a double beat, another strong report coming in from Disney. A couple of things moving this stock right now at more than 2.5%. Earnings per share $2.06. The street was looking for $1.86. Revenue $25.25 billion. That's a beat as well. So a double beat. The two big questions are streaming and parks and experiences. And what the CEO, Josh D'Amaro, of course, who's the new CEO over at Disney, just said, he just took over in March. He said our strategy is we're going to be investing more in our entertainment businesses as well. Toy Story, the success of that is actually a big piece of why they saw revenues jump for the quarter. The company also talking about that they're going to be changing, they're going to be reducing costs across their enterprise, evaluating a variety of levers, including reductions in labor. So there might be a little bit of a shift in the labor story over there. And my apologies, $25.25 billion, slight miss on revenue. $25.4 billion was the estimate for revenue. But again, streaming and the Toy Story numbers, and of course the parks division, the two big pieces that investors are focusing on right now with Disney.
All right, stock's up 3% right now, helping the Dow Industrial show a gain of 180. Quick break, and then we got a lot more right here. Stay with us. We'll be right back.